Welcome, guys, to our show that we call 3D Traders. This is the show where we give you three different perspectives on what we're seeing that's being activated in the market. We have Patrick, who is actually the AMD lover, and he's a specialist in news, and he has basically the ear on the railroad track and understands all the news coming out, and he understands how to decipher it. Then we have the forever Tesla optimist, Everson, all the way in Hawaii, and he is amazing at describing what is a good apple and bad apple with his fundamentals. He understands the PE ratios, and he can tell you when a stock's going to go up or down. And then you have myself, Max. I basically look at charts all day, and I'm looking for momentum, emotions. But when you combine our three visions or three perspectives, you're getting a 3D image of what the market is actually doing. And so listen to our show. We're providing a lot of value, and listen to each perspective and find the information that you like and the information that you don't like, and then you'll grow as a trader. That's what our job is. We're trying to make you guys increase a little bit here and there, make you more a more consistent, safer, profitable trader. That's our goal. So let's actually first, the disclosure. This is for entertainment purposes. We're trying to help you become a better trader, but there's always a risk when you invest money in the market. So let's start with last week. What did we see? What happened? What kind of trades did we do, Everson? Start us off.
How about you start off with Patrick? I'm a little bit behind here. I do.
Yeah, sure. All right, Patrick, what do you have?
Well, why is the SPY above 300? I mean, if people are discounting the market, so much optimism. We've talked about it several times now. People are living on hopes and dreams. There's going to be a vaccine soon. No, not yet. A lot of companies are still struggling. There's a huge concentration of activity in certain companies that are doing really well, especially if you think of the FANG, which is the big tech stocks. But other than that, a lot of the sectors of the economy are still struggling. I'm living in Virginia. We're actually in an uptrend still. The governor is adding more restrictions right now. So people are living with rose-colored glasses right now. The market is really high up. So for me, I'm always cautious a little bit. This week, one good play that I did, I was a little bit lucky with silver. You know that I trade silver every week. I was at 1650 and it went all the way down under 16. But then as the week went on, it went back up above 1650. So that was a really good, I made a decent amount of profit on that. And then something else that might be interesting for viewers is we've talked a few times before about power hour, which is, or as Max likes to call it, amateur hour, which is from 9:30 in the morning to about 10:30, which is mostly retail investors that trade in the morning on emotion. So that's why there's a lot of volatility in the morning, especially. So in that first hour, you can often use that momentum going one way to exploit it a little bit. So I was looking at a company called Logitech, which most of you probably knows. It's a manufacturer of hardware for computers, and it's been on an uptrend. So I just bought a call, and by the next day in the morning, it shot straight up. So I was able to sell it for about 1 or 20% profit overnight. And then as the day went on, it retraced back a little bit. So if you want to exploit this big momentum, you have to be in and out fairly quickly. Everson can probably talk about it a little bit more since he does that fairly often. But I thought that people might want to take that into consideration because sometimes you might be on the other end of the spectrum. So you have to be really careful about that.
Wow. So there you go. I mean, strategies to make 120% overnight. That's amazing.
But remember, this doesn't happen every time. There's always risk involved.
There's always risk involved, but that's the possibility. You know, if you're going to work, if you still have a job, it's a lot harder to make that kind of income. At home, Patrick, in a couple of hours, he made that. So it's possible with the correct information. And that's what we're trying to provide here to help you guys guide in that direction. Now, he did mention about the first hour of the market, the amateur hour. So the market acts very differently the first hour of the day. it acts very differently during lunchtime on the East Coast, which is 12 to 1. And then you have the veterans that finish the rest of the day. So let's move on to Everson. Are you ready to share what you saw last week, what you did?
Yeah, so I actually traded out on Facebook. I actually made a call at the top for Facebook, and with perfect precision. I think nothing could have been more perfect than that. Sold out. I think it was a little over 100%, if I'm not mistaken. And so, made good money on that, and then ended up wanting to get into a puts position, but I decided to just trade something else. I could have done a puts position and made the same, because the drop was just as well as this climb. But I mean, I made money off of it, so we don't need to be greedy in this situation. But what I am working on is trying to consolidate the amount of stocks that I'm researching or looking into. I just see opportunity. I get excited. It's like a kid in a candy store, You see stocks, you're like, oh, this one's on sale. And so, well, not a kid. I mean, kids would have been able to tell sale prices. I think they just see and they want. But that's kind of like,
I don't know. Warren Buffett started reading that at like 15 years old. Started reading ticker strips. Yeah.
Awesome. But yeah, so I did Facebook. I've been strong on Tesla. I picked up a company, Triumph Group. So I picked up some puts on Triumph Group. They'd actually gone up a little bit. So I'm still all over the place, but trying to just do some consolidation standards at this point. Good news. I believe that I have reached my goal for the year. So right now, it's just all profitability from here, and just building the growth of finance. So I'm pretty excited about that.
Everson, is it safe to say that you thrive in chaos with all of your positions?
Oh yeah, I mean, because it's like the momentum, right? So when you get things that's happening, when chaos is happening in the world, that's all the more opportunity to be able to make money. If there wasn't no chaos, then you just have a consistent something, and you wouldn't be able to see the spikes of things. So just the fact that the world is chaotic right now gives you the opportunity to be able to, like, you should be in the market now. There's no better time to be in the market right now.
Well, as for myself, I got into silver, of course. That's what I do all week. But what was interesting is at the beginning of the week, actually from last week, the previous week, there was a bearish cross in the indicators that I follow, and showing that silver was going down. But what happened is actually silver recovered quickly, and then there was a bullish cross, and you saw silver pop. What's really interesting about that is silver is now making up ground in that gold to silver ratio. In the past 2 weeks, it made up significant ground. So that's reducing the value of gold compared to silver, if you guys follow that. Last week, we had the SPY go over 300. And like Patrick started the show saying, like, how is this possible? Well, we're going to talk a little bit later in the show as to, I did a lot of math last week. Just doing some math, I think a total of 12 hours specifically to understand the concept of why it was going over 300. So I think I'm going to be able to share this on the show. I hope I don't overload you guys with some information, but this is some pretty high level stuff. So we'll share that later on. So Everson talked a little bit about goals. I wanted to segue into how do we create goals? Why are goals important on your journey in investing? And as for myself, at the end of the month, I create my goals for every week for the following month and my goal for the overall month. And that gives me a target, so that way I'm not too shy with my positions, and I'm also not too aggressive. And the goals take into account how good I am at trading, what kind of returns I usually get, what kind of market we are in. And so that way it gives me a blueprint of how aggressive I should be with my positions. If I'm hitting way above my goal, then I know I need to throttle down a little bit because I'm being too aggressive and I'm not sticking to my plan. So I wanted to go with Everson, since you brought up the point of goals. Why are goals important for you? And then what's your procedure? You know, what kind of goals are you creating? Weekly goals, monthly goals, just a yearly goal?
Yeah, so I'm glad you brought that up. Over this weekend, I had one of my friends come by. We talked about goals, and for me, goals were really important because it gives you perspective. And when you get that perspective, you want to move yourself into range, right? So if, say, for instance, since you're on finance, since you're talking about money, if your goal was to be able to make $10,000, you need to put yourself into perspective to make that not only possible, but with the relative of risk. Now you could take maybe an asset fund of some kind, whether a call or put or whatever, and make yourself that 10 grand within a couple of weeks, right, on the right stock. But is that practical if you only had $1,000? In my opinion, it wouldn't. I think you would be taking too much risk. So goals help you to see the perspective to know, okay, I want to reach this goal by X amount of time. I think that would be the best perspective to do it. You know, right now with the amount of assets that I control, and I think you guys can say the same. There should be no reason why we can't make, you know, 5-digit salaries with trading off of one trade. But we put ourselves into perspective, I feel, in my opinion. Well, I do it at least, and I go for a more focused on risk tolerance, and I build myself that way. So small increments,
Everson,
I don't have to make money overnight.
So if I've averaged about $50 in profit for the past 6 months every week, $50, you know, would it be realistic for me to make a goal to make $10,000 next month?
Every month you're only making $50?
So every week for the past 6 months, I've made $50. You know, should my goal for next month be $10,000?
Well, that'd be about
you leveled up pretty quickly there, Max.
So so that the reason why I asked that question is because you said it's all a matter of perspective. You know, you're not going to go from making $50 a week to 10,000 over a month. So that's why I love that you brought up the point. It's all about perspective, your skill level, how much you have, that kind of stuff. So Patrick, what's your take?
I've said it where on a weekly or a monthly basis, where I try to be in range with, oh, I want to make, you know, X amount in a week. But I mean, let's face it, as a trader, it's not going to be as consistent. Trading like how I trade, it's not going to be as consistent. You'll have some down days, and I think this goes for everybody, but you'll have some down days. So you'll have some times where in the week or in the month, you're not going to hit your goal, or you might even lose money in the process. But your overall perspective and how you recover from that is the most important thing, and that's where risk strategy comes into play.
Absolutely. Now, Patrick, what kind of approach do you have in setting your goals, and why are they important to you?
So I have a little bit of a different perspective on it. Personally, I don't set monetarily or percentage goals, just because of the fact that, you know, things are changed so rapidly for me right now, and I'm involved in a bunch of different things. I have real estate a little bit, I have collectibles, I have other stuff, so I have mortgages and everything. So with the stock market, my objective is mostly to focus. My goal is to stick to my strategy. Right now, monetarily, I don't really care. Obviously, I want to make profit, right? But I'm not trying to achieve a certain percentage. I've talked before. I've talked about it before. How I used to have a little bit of risk versus reward problems. So my whole goal right now is to just stick to sound principles and go up from there. So I'm not trying to reach a certain amount per month or something like that. I just want to stay in the green and go up and try to stick to the strategy and adapt it to something that's like safe and repeatable and consistent. So a little bit of a different perspective in that regards.
No, absolutely.
I mean, that's what the show is all about. I mean, you're getting 3 different ways to create your own goals and how to follow through. So now let's talk. I'm having a lot of conversations. I have a lot of phone calls with investors, and so I have more friends than Patrick and Everson, and I'm sort of getting into a few arguments right now where I have a lot of friends that feel like this is a very bullish market. But also, a lot of people are asking me, is the market going to crash in 2020? So I wanted to ask you guys, what kind of information would you say would support a bullish market in the foreseeable future? So Patrick, why don't you start with that? Why should we be bullish?
You didn't mention that we had a pretty good argument about that this week. My main theory about that is that with the government injecting money into the economy, unbelievable amount of liquidity in the economy. Just this week, I mean, they finally reported what the Fed has been buying as far as bonds. They've bought, I believe, 140. Don't quote me on that, but about 140 billion in bond ETFs just this, up to now. So think about the amount of liquidity that adds to the market, and people know that there's almost a backstop to the stock market now. The government just will not let it drop under a certain point. And without getting into politics, it being an election year, we all agree that it's in the government's good interest to have the economy go pretty well, right? And they're hammering that the stock market is doing good. So the main theory on why the market is so bullish, in my opinion, is the government is going to backstop it no matter what. And there's always the fear of missing out that I talk about all the time. Companies are trading at some P's that are irresponsible almost. But when you see everyone buying it, you're like, well, I have to buy now or otherwise it's going to keep going up. I mean, we already missed the bottom from March. So should we jump in now? Well, a lot of people are having those conversations.
I feel like sometimes that could be like a false sense, though, of, I'd be cautious. I mean, like you said, the PE ratios are trading at levels that are dangerous. And you look no further than Tesla and AMD, right? I have a different perspective when it comes to Tesla.
Did I just hear you say short Tesla or buy puts?
No, I mean, I have like I said, I have a different perspective when it comes to Tesla. I think that people are looking at more of the technology. They're not even looking at the fundamentals. So it's just a different animal. I mean, Elon Musk, for instance, he's not I think he's an alien. Not officially, but
he's going back home on Mars.
We must go to Mars. When we come here, I will introduce you to my people. No, but as far as we're talking about the bear markets in the right now, right?
So right now, why are we bullish? Why should you?
Why are we bullish? So I would say we would be bullish now for the opportunity. Like Patrick was saying, it's an election year. But the Feds and the U.S. Treasury, they have a responsibility too, where they need to sustain the economy, and bringing the stock market at levels where people are losing money in their 401ks, people are losing money in their retirements. Those who want to retire, maybe they can't retire because they've lost 50% of their portfolio. So it's more than just the economy. It's more than just the election year. It's actually people's lives that the Feds and the Treasury, first and foremost, they need to respect, and they need to address. Not to mention other countries. Our stock market does affect the currency. I could see that when you start to devalue our stock, you devalue the currency in an offset. So I know that they usually have offset correlations, but I think the reality is that the more worthless the dollar becomes, the more worthless our stocks become eventually at some point. So there's a fine balance. And I think, Patrick, you never wanted to go into politics, but I think politics has a big play in all of this, because on one side of the news media, you have people saying, yeah, crash the stock market, that this is white money or whatever. And then on the other side, you say, hey, build the stock market because of the trickle down effect. So you have these two analytical views of what people feel that the market should be like. But when the opposition is in house, you would never say that. So I understand that a thriving market, a thriving economy may show success for the current presidency, but the bigger picture is what's at hand, and lives at the bottom of it. Lives matter. All lives matter, not just one type of segregated group of people. And we'll all be affected in this if we keep playing dirty politics. And so that's why I feel in my research I do a lot of analytical study and a lot of fundamental study on what's going on in the political realm. So it's just a different perspective for me. It helps me to be able to understand the market a little better when I start to get involved with it like that.
Yeah.
Hey, Max, just before we get your perspective, I just wanted to say there's almost also a Robin Hood effect now. I don't know if you guys saw this, but I've talked about Hertz before. Now I was keeping track of it. Well, as you guys might know, like it filed for bankruptcy, right? And when it did, it crashed to 55 cents. But right now, people are so starved for good deals that people on Robinhood, it became one of the most owned stocks. People actually bumped the value of the stock from 55 cents to 137. So people actually bought into the bankruptcy, even though the stock might possibly become worthless. So that's just to mention how the FOMO effect is in full force right now.
But do you think that they did it because there's a reason for it? Maybe it was the restructuring deal that they could still
it's possible.
own the stock?
It's possible, but there's a lot of younger traders that they want to get in. They're not sure. Right. They're not cautious enough. Like they're going for big plays they're not going for the easy money, the low hanging fruit. They're going for speculative stuff.
Well, what I was
the overnight billionaire.
Yeah.
What I was thinking about is if you guys take a look at the stock of HA, which is Hawaiian Airlines. Back in 2008, Hawaiian Airlines went through a restructuring. They filed for I think it was Chapter 11 or one of the bankruptcy proceedings, but they were able to refinance their deal. It's just interesting. Hawaiian Airlines buys a bunch of planes in a time where they knew that the economy was going through a recession and got all of that forgiven. And I believe that they never even had to pay those back. So is Hertz going through something of a similar process? Have they bought out all their fleets of cars and now they don't owe a single penny for it?
No, I agree with you, Everson, but it's more of a comparison between something and something else in terms of like you're big into Tesla. Why not go into Tesla that you say yourself, like you're a lover of Tesla that has massive potential in the future, instead of going for a company that's on the verge of bankruptcy, hoping that they restructure, hoping that they keep some of their fleet and they rebuild because they're closing some of the locations. You know what I mean? Like it's when you compare the two.
It makes sense because from 55 cents, I mean, it could jump up to $5 real quick. So if I'm a Robinhood trader, I don't know a lot. You buy a few contracts of Hertz, some calls, and next thing you know, you might actually make 400, 500, maybe 1,000% return on your investment. And how much did you risk? Not that much because the options are very cheap.
Put in $100, get 500 back.
All right, you guys ready to hear a little bit about my math?
Yeah, why are we going bullish, Max? Why is the stock market going back to? I don't remember what you said, but.
So last week I mentioned a little bit, and I agreed with this one investor that was saying that the market's overvalued, the worst PE ratio since 2000. But what he's comparing it to is the current price to the current earnings. And so the earnings are going to be horrible. Why? Because we're going through this process. This virus is affecting the market. But I'm going to keep the numbers simple. And I'm actually going to go very conservative. But if you're looking at the entire market, the stock market value, you're looking at about $20 trillion. They're saying at the end of 2020, it's going to be about $22 trillion. And so from all the research I've done, I've found 3 different values of how much money we've injected into the market. 10,000, I'm sorry, 10 trillion, 15 trillion, and 20 trillion. So again, let's go with the most conservative, $10 trillion into the market. So that's actually 50% of what the stock market is. But that's actually, let's go more conservative. The entire US economy is $20 trillion. So now we have an entire value of $40 trillion. And we're adding $10 trillion to the market. So now we're actually increasing the price in the stock market by 25% conservatively. We're using all the low numbers instead of the high value. So I'm actually projecting for my own trading, I'm looking at the SPY going up to $540. But using these conservative numbers that I just mentioned, I'm talking about a SPY at 425. The SPY right now is at 304.32. And that's if there is no increase in value. This is just on the inflation, the price going up. So now once you get the earnings coming back, you're going to see the price go up even more. So that's why I'm very bullish, not because the increase in value, but because the increase in price directly correlated to the inflation. And if you want to add gasoline to the fire, the rest of the countries, especially Europe, is going with a negative interest rates, which actually forces investors to stay out of cash and invest in what's easier than real estate, the stock market. And what's more consistent in the entire world, which market's the most consistent? The US market. So we're getting flooded from around the world by countries that basically can't keep cash. So all these numbers together, I'm looking at every single stock going up tremendously in the next 6 months. But enough about that. Let's switch the script and let's go with you, Everson. Why should people be bearish? Why could the market crash?
Well, I just want to, I mean, maybe you can bring in this topic later. Or actually, I'll just bring in this topic now. The removal of the Hong Kong special trade status and how it could drastically change things for the U.S. market. I mean, how's that for bearish? I mean, that war has been going on for many years between China and the U.S., but it's interesting that now it's coming to light, right? The narrative is stronger now, and China is more vocal about things now. So, you know, the pushback with the Chinese cell phone making companies, you know, obviously we don't want them to come in and interfere with our privacy. We don't want changes to happen where China gets control of our people and our infrastructure. So as a responsible president, no matter who's the president, you kind of create a little bit of regulation around there, especially moving into the 5G technology. With that same token, you know, just looking at what's happening locally with the virus still, there's a lot of reasons why you could still be bearish here. It seems that with some of the local media, they'll bring up issues about the numbers, about the virus, about hotspots and everything, about a new occurrence or, you know, the virus changing. Now we're talking about like it wasn't bats, it's monkeys. Like, it's always something negative. And I think the narrative is that, you know, the news media wants the economy to fail. What's interesting enough, what I thought was interesting was when, you know, you had an unfortunate incident with that guy George or whatever, Gregory or whatever his name was. I do apologize if I butchered his name. But, you know, irresponsible for any person, you know, to be able to go through to that. I mean, I know this case and scenario is the officers that create wrongdoing, but you'll always have bad actors no matter where. But to get to a point where now society is rallying around it, and creating this uprise, I think it plays a part for fighting fire with fire. I don't think anybody wins fighting fire with fire. Justice, yeah, we need justice, but at the same time, causing chaos, causing havoc, would just, for me, give me more fuel to the fire. And
so you think
we need to stomp out the embryos.
You're talking about what's going around the country might actually impact the market in a bearish method?
I think so. Yeah. I mean,
okay.
when you got businesses that, they just went to the virus, now their stores are getting, trashed and everything stolen, I'd shut down locations. I mean, in an offset, when you shut down locations, you make money simply because you don't have that on your books anymore. You don't have that salary to pay for. But there's an offset. There's a butterfly effect, essentially, is what I'm saying. There's a butterfly effect to everything. So even, that could be the number one store, for instance. And if that's your number one store, like most of the stores here, it's going to naturally be a number one store because of how we had our tourism. But we don't have tourism anymore. So how does that affect everything? Well, Walgreens shut down. Our largest Walgreens that we had on Keomoku is shut down.
Wow.
As of June. And that's big news because they just built that building. So what other stores shut down? And, quite frankly, I think that it would have been a big moneymaker if the economy just would have thrived continuously. But now we can't even see that research, that statistics. Wow. So how do you
it couldn't even last. Yeah.
Right.
So Patrick, what do you have to add? I mean, why should people be bearish, and why should they possibly take money out of the market?
Honestly, I can't really tell you why, because I don't believe in it. I mean, I asked you guys this week, are we in a perpetually bullish market right now? Because of the factors that I mentioned. So I don't believe in it, right? I mean, I've said many times how I'm worried about second wave, possibly the conflict with China, as Everson mentioned, because if we bring it to the extreme, there might be almost a decoupling of our two economies, which would be pretty bad. They're already going to remove our preferential treatment towards Hong Kong. So all of those factors are bad, right? Like, we agree that they're a risk, but the market right now is ignoring all those and has been. So right now, I mean, I don't see any reason right now to be bearish. Cautious, but like, why would you sell right now? I don't see it.
Okay. Well, so my opinion, why should you be bearish? Because it's very possible that we get a second or third wave of the virus, especially when we get into the fall. It's very possible. And you know how scared people will be when this happens again. And another reason why I would be bearish is because I always said that the people that lost their job, that went on furlough, they would get their jobs quickly. They would get them back. And I actually said 60 to 70% of the unemployment would get their jobs back as soon as the economy went back rolling. The longer that we're staying in quarantine, especially in some states, those jobs are actually now disappearing. And so now you went from furlough to actually now you are literally unemployed. So the longer this process is lasting, to me, the more chances are that you could be bullish. Now, I do want to couple the two views that I had, my bullish view of very high inflation, increasing prices in the stock market, plus my bearish view. I think that we will see a crash, a retracement, but we will not see a retracement all the way down to the lows that we saw in March. Not because it's not going to drop as low, it's because it will be the same value but at a different price. And so for my chartists out there, technical analysts that understand the charts, it won't form a W. A W is when a chart forms a double bottom. It's actually going to create a sideways W. So the low of March will be much lower than the low of the retracement crash, whatever you want to call it. It will be the same value, just at a much different price. So if you're looking for the same entry price that you saw in March, in my opinion, even if we get into very bearish mode, I don't think you'll get back to those prices. You'll get back to the value, just not the price. It'll be completely different. And so that's my bearish view. I also feel like now that the market is above 300, or the SPY is above 300, that gave confidence to Trump and his administration to go back to attacking China with their trade war. They had put that on the sidelines since the virus came out, but now they feel confident with the market coming back up to start swinging again. So ever since basically you're an expert on China trade war, so I wanted to start with him. Give us what's happening with the U.S.-China trade war. How is that going to impact us as consumers, and how could that impact us as investors as well?
Well, I know that they wanted to renegotiate a deal. China did on trade. I mean, simply put, America and Donald, he wants China to be purchasing more of our products. China said that they would do so. But now with all of this turmoil going on, China doesn't want to right now create a deal to be able to pick up products from America. And so in return, we go and we try to create a tax to levy that to create some kind of stability in that trade balance. And I think that it's still an ongoing process. I mean, who knows at this point what will happen? I mean, there's just so many variations, and that's what makes it even scarier for people, is because you have that virus, you have the trade, you have Hong Kong, and you also have the relationship with people all over the world. I mean, you had 5G, and you have the relationship with finances all over the world that not only America is working with, but also China's working with other countries like the Philippines, like the Arab nations and things like this. So it's really hard for me to just look at one perspective of just trade in general without me having to focus on the other factors. And I think I'm not the only one. I think China realizes it. I think the President Trump realizes it. So at this point, it's like you said, play it by ear.
But as consumers, we're buying less from China now, and a lot of countries are buying less from China. So why should they buy up more from us if we're actually decreasing our consumption?
Well, and see, that's the thing too, right? People are buying less from China because they don't trust China, in particular Europe and
well, it's also they don't have money right now.
Right. And so what China has done is they've offered attractive deals for other countries. I mean, if you're looking at like weaponry and things like that, they've offered attractive deals for them to be able to pick up, or maybe just, loans, like free loans, 0%. Plus we're throwing an extra $100,000 on it. I think I've mentioned this before, but you can't refute a deal like that when China's offering it to you. And that's what's happened with Philippines. That's what's happened with a lot of the docks that they've built in Africa and along the coastal the old Silk trade route. And so I think the only 50-50 deal was one of them that I know of, Russia and China, when they built that bridge that's now connecting Russia and China together. That was a 50-50 deal. So Russia put in their resources, China put in their resources.
That was part of a backdoor trade agreement to bypass the U.S. dollar when buying oil. And so that was part of that alliance. Patrick, what do you have to add to the scenario in the U.S.-China trade war? And then how is that affecting your trading?
Well, what's interesting is that, I mean, last year we had much tougher, like we didn't even have the phase 1 agreement yet. And a lot of companies were going down and, you know, not really stable. But what's surprising is that right now, if you look at a company that has a lot of exposure to China, like Apple, Apple is much higher now than it was late last year, you know,
Yeah.
the stock price. So I'm not sure. I mean, it's not really affected it nearly as much as I expected that it was going to. But what about this time? I mean, it really depends if they get into an agreement. I mean, you said that the administration is a little bit more, it's the current climate is a little bit more conducive to go back to attacking, but not really. I mean, we really are interconnected with China right now. So, but we have to keep an eye out, especially with the bill to potentially delist some of the Chinese companies. I feel like those are the ones that are mostly in danger. We'll see. I mean, we have a lot of big companies that are dependent on China, so the administration is not going to totally like go all out about it.
But
Well,
you remember last time we started the conversation of that trade war, and there was a negotiation going back and forth, and then the news really got involved with it because it gave them a lot of eyeballs. And so one day they print out like, hey, the deal's not going to happen. They're so far apart. And you remember how it really affected prices, especially in the tech industry.
It
So
did,
how would
but
you play with those news?
do you remember what happened every single time? The president launched a tweet that made the market go back up. So that's why I'm not as suspicious about it, just because of the fact that they don't want to let the market fall under any circumstance. So everything you said earlier about being bearish on the economy, you're right. I mean, I 100% agree. That's my personal belief, right? That the market's a little shaky. I feel like we're halfway to the bubble of 1999 in terms of people being so exuberant about buying no matter what. But that doesn't mean that the stock market is going to go down. You know, people want to buy, so it's going to keep going up for a while until eventually the bubble bursts. And I don't think that they want the bubble bursting from the China trade war. So
I think institutions are too big too. I mean, institutional money, I think it's too big. So you get the government that's trying to step in to correct it. I mean, let's face it. At some point we all want to retire. We can't retire on a down market. We'd have to just keep working until that market comes back up again. And many people don't realize it because many people are on their 9 to 5. And what were you gonna say, Max?
No, I was just going to say, I could see you on the edge of your seat ready to give us some more information. So I was going to go to you.
Yeah, no, I agree with Patrick. I mean, there's nothing. Trump doesn't want the market to go down. The Feds don't want it to happen. U.S. Treasury doesn't want that to happen. People who are retiring don't want that to happen. Europe definitely doesn't want that to happen because we're so interconnected. I don't think the world wants it to happen, but China does. And
even a pandemic wasn't enough to keep the market down for more than a month. Think about that. Let that sink in.
Well, but let's not be too cocky about it too, because I mean, we don't know what kind of tricks China has up their sleeves. So, you know, they started it. You could tell right now through everything that there's a frustration with President Xi, and he wants to create something where, and you know, ultimate power is there. Yeah, you could just see it. You could see it in the narrative. You could see it in the dialogue. You could see it in the echoing effects where we'll start to see it in the news media. It's transparent with what China wants. So when you hear that kind of narrative, when you hear the echoing of that going through in and out of, and you can even see the moves in the market and everything, I want to be optimistic at the same time. I am sort of, I do put puts as insurance, but at the same time, I'm a little more bullish. I mean, I said it last week, Friday, right? Where we had the discussion about whether the market was going up or down this week. And I called it.
You got it right. You said it was going to go up. You did. Hey, guys, it breaks my heart. All right, Patrick, you got like 2 sentences.
Yeah, I just want to ask Everson. I don't know if you've revealed it on the show or not, but you're involved with some Chinese companies like JD. Like, so how do you trade it now in this circumstance? I believe that you said that you wanted to keep it for a while and see what happened, but how do you handle that?
Because when you look at how many people are in China and you look at its penetration rate, I mean, and the fact that everyone's staying home, JD is like the eBay.
No, I
So
agree on that,
Okay.
but with the
yeah,
current condition of the market and the uncertainty we've been talking about, that doesn't like make you
it doesn't
nervous?
apply. It doesn't apply at all because, like I said, so JD is a competitor to Alibaba, and Alibaba isn't going anywhere. There's just too much money in it. JD isn't going anywhere because there's just too much money in it. And when you look at the correlation between people in China and the penetration rate, they haven't really experienced full-heartedly this concept of ordering online. Like in America, until the pandemic, we haven't fully embraced the concept of ordering packages online until now. Now it's the new reality, and now is the new move into the future. So this is new money. So that's where my confidence is in it, and the fact that we haven't reached full market penetration, and there's 1 billion people in China. There's 1 billion people in China, and only a few million are there buying things. So it's like it's literally, to me, a no-brainer that you would, and it's a reflection directly in the stock. I mean, that stock popped like 3%.
As
All
long as
right,
they don't
guys.
get delisted.
It hurts my heart. It breaks my heart, but I need to end the show here. We've run out of time. But this is just to show you how just the conversation that we have every week is actually making ourselves a better trader. I'm a better trader because of this show, because of the conversations I have with Patrick and Everson. And we're providing you guys with all this value, all this information to make sure that you become a more profitable, consistent, safe trader. And that's what we're here for. We're glad to share that information with you guys. Make it a great trade or not. The choice is yours. Click subscribe. Send us a comment, a question. We love to answer those. We will see you next week, and have a great week.
See you guys.